This is it. We are one step closer to securing your next home, but not quite yet at the finish line. Once your loan has been formally approved, loan documents will be issued. But you want to make sure all the information is accurate and you truly understand the loan you're taking out. Even though errors can be unavoidable, the earlier you can detect any issues with the documents, the faster it can be amended to avoid delays with settlement. Hello again, and I'm Priscilla Tan, and today I'll be walking through the key features of a loan agreement to set yourself up right with the loan. A loan agreement is a formal offer from the bank issuing with a loan. Upon signing the agreement, you agree to the terms of the loan and give authority to the bank to process this loan. In order to do this right, there are important things to look out for in each section of the loan agreement, including the letter of offer or loan agreement, mortgage, loan account authority and direction to pay, direct debit, and summary of your financial position. Letter of offer. The letter of offer is the official loan contract between you and the bank and is a binding agreement. You should first check to make sure your full name is accurate before proceeding to review the remainder of this document. Once that has been checked, you can review the rest of the document, which will contain the key details of your loan. This includes, number one, the loan amount. From the time you had submitted the loan to getting an approval, it can take some time and likely there has been some changes in between. So it's important you don't assume the information is accurate and that you carefully check the loan amounts. The document will break down the loan structure if you have 2 or more loan splits. Number 2, the interest rate. Corresponding to each loan, you will see several rates presented. If you've ever been confused by this, don't worry, you're not the only one. Let me explain. Standard variable rate or index rate is a benchmark rate that banks uses to price other home loan products. Interest rate margin is a discount which your broker has negotiated or your bank has preset as part of your home loan. Therefore, we get to your current interest rate by taking the standard variable rate minus the interest rate margin. Number 3, repayments. Based on your loan amount and interest rate, you will also be provided with your estimated repayments, so you know the minimum monthly repayments, except if you've opted for interest only, as this can change month to month. Number 4, fees and charges. The bank will present in detail a list of potential fees and charges that will be applicable during the life of your loan. Some fees are mandatory as part of settlement, such as government fees, annual fees, or any upfront fees to pay the bank to manage settlement. The other fees listed are generally only applied when you make a specific request to the bank. For example, if you're ever wanting to make a large same-day transfer. After reviewing the letter of offer and you're still confused about the terms or explanations, you do have a few options. 1, reach out to your broker. 2, if you don't have a broker, you can contact the bank directly for them to assist you. Or 3, you can seek legal advice. The mortgage. You'll often see the mortgage document. This is what gets lodged for registration with the appropriate government body in the state where you're purchasing your property. The key to this document is ensuring your name and title reference is accurate. On the mortgage, you will not see reference to the property address because the unique identifier to your home is the title reference. The title reference of your property can be found in the contract of sale or the valuation, which gets completed. Loan account authority and direction to pay. The loan account authority is what helps you set out the right authorization for the accounts. You can authorize someone else to handle your accounts in 2 ways. 1, you can choose if one borrower or all borrower signatures are required to make changes to the loan account. Or 2, you can appoint a third party to help you with managing the loan. More importantly, on this document, which is relevant to the settlement of your home, is the ability to nominate an account for shortfall of funds. This is a key part to setting you up right for settlement. Direct debit form. The direct debit form gives you the opportunity to apply for a direct debit to repay the home loan. In our day-to-day, there is already so much to remember, so we would recommend you set this up prior to settlement so you'll never be late on your home loan. You'll have the ability to choose how often you wish to make your repayments and if you want to make any additional repayments on top of your minimum monthly loan repayments. Summary of your financial position. In recent years, this has been a newly introduced document that summarizes your financial position and what you presented to the bank to achieve the loan. The purpose of this document is to confirm that the bank has deemed the loan as not unsuitable and that you have satisfied their requirements. The information presented here should not come as a surprise, as your trusted broker would have provided you with a copy at the time of submission. However, if you notice any incorrect information, then this should be raised and rectified before proceeding. So, this is a summary and explanation of the key features which you will see in your loan documents. Hope you enjoyed this video, and remember, you can always ask for help to ensure you have set yourself up right for the loan at settlement. Thank you, and I look forward to seeing you again in our next video.